Hi, good afternoon, good morning, Ryan, Guy, Adair, good to see you, Hassan. Very warm welcome to you. Hope you're doing okay. Right, looking forward to this session. We're going to get stuck in. I'm going to give folks 30 seconds or so to sign on in, then we'll start looking at things. Hey, Ryan, hope you're doing well. You had a good weekend. I had a very nice weekend in the Cotswolds, visiting some family, beautiful part of the world. So that was a very nice weekend on my end. All right. Just going to give folks 30 seconds on me. Is that this one? This one here? Yeah, it's nice, Ryan. It's well worth a visit. It's a beautiful, beautiful part of the world. With the MV, do you mean this implied volatility here? Thank you. Have you got a screenshot of the correct one at all? Or do you know what the correct one should be? I thought how close that was. Yeah, that struck me as well.
US President Trump talking last week's jobs data.
Yeah,
he says
cheers, Ryan.
it was rigged. The report to the presidential election were rigged. That's why in both cases
we were actually
there was massive record-setting revisions in favor of the radical left Democrats. Trump goes on that those big adjustments were made to cover up and level out the fake political numbers that were being concocted in order to make a great Republican success look less stellar. He says he'll be picking an exceptional replacement. Thanks us for our attention. So it's US President Trump outright just claiming that the last week's job data was rigged. And he says that they were concocted to make Republicans look bad, essentially.
Okay, thank you, Ryan. That's well done. Good man. I know I was talking about this last week with Paul and Dan was saying that a lot of these levels are slightly different because they're using slightly different data sources. So I know we were looking at this issue. And this is an issue that we haven't quite got ironed out yet. So that is really helpful feedback. Thank you. Good man. Just going to make a note of that to do that later after the session. Thank you very much. Let's get stuck in now. The big news, of course, let's start with the big news, was we just heard Trump rallying against the head of the Bureau for Labor Statistics who produces these jobs numbers, Friday's jobs. Right, below the expected of 100,000, which was bad, but it was that revision that really shocked markets. Down from 147,000 to just 14,000 in June. That's bad. So all of a sudden, the market's gone from, to there's something wrong with the US labor market, and it happened like that. We were here Friday trading that. We took advantage of it and did well. Now, if you look at the way the market reacted on Friday, this is the tricky bit. All right, so what we saw was buyers trapping sellers on that 15-minute candle on the NFP. Why? Because it means the Fed is going to be cutting interest rates, right? So that's positive for equity markets. And if you look at interest rate expectations, look how they've dropped now. So September, it's 90% chance of an interest rate cut, and it was like 50-50. So big move. And the market sort of sold off because it's like kind of, the US labor market is struggling. That's bad for the US economy. So it moves lower. That outweighed the prospect of coming interest rate cuts. But now, right, markets are settled down and earnings reports are still meant to be good for the coming quarter. So it's not like companies have said, we think our earnings are going to be down. And now all of a sudden there's this labor market that confirms the downside. No, this is now a situation where the Fed will be cutting interest rates more likely in September. So what does that mean? That's upside for equity markets. So what that means is the broad outlook now is buying. Now I know we've had this drop, and if we get high inflation, that can be negative for stocks. If we get weak labor market, that can be negative for stocks. The big data point to look at now, it's not necessarily big, but it's the next important one is tomorrow. And that's coming out from the ISM Services PMI. Coming out, let me just show you tomorrow. And in particular, what markets are going to be looking at, they're going to be looking at the new employment index and prices paid. So if you see a big hit in the employment index, that'll be negative. Or potentially more like interest rate cuts. So you could actually see the market taking it either way. But it'll be looking at it, and the same with the prices paid. If that's hot and high, then that will be negative. So the reaction out of the Fed Reserve meeting is one that makes sense. Look at bonds. Big bid come into bonds because investors see lower interest rates, so buy bonds. That's happened around the world. And then we saw the dollar weakening. We've seen gold pick up, right? Copper had this big drop. I bought into copper and silver down at these levels. Like it, and you got a potential Harami bar, inside bar breakout here, big support level that we're in here. See that big support? So I've just bought into that. And if you remember doing your market profile work, what's that going to look like on the market profile? That's going to be full of volume profiles. Okay, value area high, 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 high here. So of course, right, it's a good value area. And of course, that was the area where buyers came in. So look, potential breakout of that level. So anyway, bought into silver, bought in on Friday. Similarly with copper, bought in on Friday with that huge drop. There's some big problems with copper production. So longer term, there's a lot of reasons to expect copper to prices to increase. So again, look at all that value area we're into. So I'm happy to buy into copper, right? Great, right? So that's my outlook, and the dollar should weaken. You can see here the dollar, right? Trading 101. Look at that bearish engulfing bar, engulfing 1-2 price. So you're expecting the dollar to weaken. That's the move, and vice versa. You expect euro dollar to move higher. There's a euro dollar buy bias from market, from pullback, especially down to here. Get down to there. Look, just buy the euro dollar. That's fine. So retracement. No. So no-brainer long position would be just about that 500 number. Stops underneath those lows. Maybe try up to that all-time highs. Right. So that's fine. All makes sense. Now let's have a look what else we can do. Yeah, so that's the main drivers. That's really what's going on. Now, the other issue, and this is good old Donald Trump, is he's now said that he's quite happy to sack the head of the Bureau of Labor. So there's going to be a new head of BLS. And we had Kugler resign over the weekend. So Trump's going to replace a new governor. And you can bet your bottom dollar, that governor's going to be dovish. And there's an opportunity now. Trump could appoint someone who then he goes on to appoint as the chair of the Federal Reserve. So he could get in an uber dove if he wants. You know, he will, right? He almost certainly will. So market's waiting for that headline to come out at some point today, possibly, right? So it's a question of just keeping your ears to the squawk. Yeah, so he's saying that the jobs numbers were rigged, right? That's and it's a politically motivated rig, put up jobs. That's Trump's sort of bottom line at the moment. Ryan, I think so some analysts would say that, right? Just buy now, okay? Now, what I'd say is, for me, that's the sentiment that we're going into at the moment, and trading that can change on a dime, right? But some analysts would say, okay, between now, the next 12 months, in a longer term view, just buy into stocks because the Fed's going to be moving to interest rate cuts. Earnings are still okay, so that should support equity markets. So that's the rule of thumb. And then this drop we've seen in stocks, well, that's a dip to buy. That's the current mood. That's the mood we're coming into now. In terms of what do we have on the calendar, we've got a few auctions this week. What have we got? We've got the 3, 10, 30-year Treasury auction, so that'll be interesting. Do investors get nervous about that Bureau for Labor Statistics release and start saying, well, you can't trust US data? So let's look at the bond auction. There'll be a sense of that. Otherwise, weak in terms of data today. There's not a lot going on. Had some Swiss inflation data out, not much there. Nothing here. Let me just check on the calendar if we've got any Fed speakers on the other calendar. Got some factory orders. Shouldn't move markets much. That's at 3, durable goods. So not expecting that to move markets much at all. Right, stocks tends to be weak, but the Nasdaq bucks that trend. Let's just have a quick look. Let me just make sure I'm not getting that wrong. So you can see here, last 25 years, S&P 500 flat to sideways. Slight positive return, but if you look at it, flat to sideways, followed by a grim September, basically. It was 2008 year. So if you took that 2008 year out, let's have a look. Take out 2008. See, September is negative 0.28. So more 50-50. If you take in 2008, basically flat. So it's sideways, really. Nasdaq bucks that, he says. It doesn't really, not as much as I remembered. Yeah, so my memory has deceived me there. The Nasdaq is still more sideways. It's the July that's strong for the Nasdaq. That's it. The July is strong, summer sideways. So we're coming into a more look. People are looking to that September drop, aren't they? And thinking, well, you know, where do you want to go? So we're looking at that kind of situation. Okay, so now going to the hourly chart, delta positive. We've seen sellers couldn't get trapped, sellers couldn't get trapped, buyers trapped sellers here. We got a developed value area low from a couple of weeks ago. So we've got developed value area low on the weekly that we're just moving into. So we're in a key support. On the 15-minute, we're also in this key support area. It's quite messy at the moment because of the huge ranges we've had. Right. So there we go. All right. So we've got this area here where buyers have trapped sellers. So we can look here for potential buyers as it stands at the open, because you've got buyers who've trapped those sellers. So you can drop down to the tick chart and see what's there. Go down to the 5-minute. If you go to the 5-minute, you can see buyers trapping sellers there. And then you've got the tick chart, which I'll be looking at the open to see, do we get any sellers trapped and then trying to go higher. So we've got 15-minute from the support level, buyers have trapped those sellers in line with that weekly value area low around the point of control that's developing, right? And we're opening above the previous days value area. So the market is wanting to go into imbalance. So looking for buyers at the get-go, particularly if I see buyers pushing above those sellers, then looking for a dip and looking for buyers, target up to that 6310. And then we'll see how things go from there, but that's the expectation for the start of the off. Nice kind of rhythm that we're in, slight rhythm change now underneath that standard deviation. So we've got to be careful of is if we are buying from this area, just watch out for stalling at 6305, the standard deviation, which is cap prices in the near term. If we can get above that area, so if we get above that in the next 15 minutes, then it's a dip down and then I'll carry on up. All right, 20 seconds, got sellers here. All right, so what I'm looking for is for a pull back to this area, then trying to get to the 6310. Morning there, Jam, good to see you. Got buyers trapped on the 15 coming up. So it opens up a buy bias from the get-go, 6 seconds left. Here we go. Right, okay, so looking for buyers. So some sellers are coming in, want to see them getting trapped. Right, there they are, trapped. Okay. There's another buy there. Just lightening off a bit. Right, I'm just closing it off, hit the value area. Not the best execution for me there, but profit's a profit. Okay, so we've hit the value area. That's a reasonable target, the highs of the days. Okay, now looking at that, you see it was these sellers getting trapped here by buyers here. That was it. I was a bit late on the entry. That was the annoying thing. Should have been there straight in. Never mind. That's the way it goes. And then just lightened off, but you can see, you know, sellers getting trapped on the way up. Entered a second position. Just took it off as we went back under. Just sat out a bit of downside, and then we moved higher again. So yeah, thanks, Ryan. I only got it in on one account, but still, I think the key to realize is focus on execution and process, isn't it? Not to get worried about it. Okay, on to the next trade.